Good morning, Emily.
Hey, you got it right this time.
Like a clock, a broken podcaster is right twice a year. I think that's the expression anyway.
Yeah, you tried.
Well, with that in mind, what are we trying to talk about this week?
What insurance you really need, what being an executor for an estate entails, and prenups.
Welcome to the Science of Wealth, where we discuss the science behind financial planning and the art of learning and applying it. Okay, risk management, and then what happens when the worst comes to pass, and what happens when you think the worst might come to pass. We're doing just varieties of things going wrong.
Yeah, there's a theme there. That's important.
All right, well, I guess let's talk about the insurance we really need. All the insurance. Buy all the insurance you can afford. Have nothing else in your life. Manage all the risks.
That's always your answer. But most people are opposed to doing that because there's also a million forms of insurance you can buy if you get into it. And we've covered some of the big ones in other episodes, like really in depth. Like, yeah, you should have health insurance, car insurance, homeowners. Sure. I feel like we've kind of gone over that. Do you have any extra stuff there, or just across the board you feel comfortable telling everyone, yeah, you need to have those?
Well, I mean, it's all in questions of gradients and quantity and quality and so on. Insurance is that classic, need it or have it and not need it, then need it and not have it sort of thing. And in that particular regard, I think most people are underinsured. But I also think that a lot of people who have an insurance person in their lives often end up with a little bit too much insurance. So there's kind of a balance that has to be struck.
That's a tough balance to find. People can do that on their own, though. Just do the research.
Well, I think most people are not literate in insurance. So in that context, it's not so much a like just do your homework and figure it out. I think it really helps to talk to a professional who is not in the business of selling the insurance. And I want to be careful there. There are a lot of really smart, hardworking, really, frankly, brilliant insurance agents and brokers who like really know their products, really know how to cover things. I just kind of have to highlight the element that there's a conflict of interest there, right? Fundamentally, they're going to get paid a percentage of whatever premium you incur. So there can be sort of a push pull of like wanting good insurance at a good price versus getting a lot of insurance at a high price. So that's where I think, not to toot our own horns here too much, right? But as the only financial planners, we're really good at saying, this is how much insurance you need. And now with that part figured out, let's go work on how and where we get that from.
Right. Yeah, I think I see that, or we all see that a lot here with life insurance. That's, I think, the biggest one where people are like, I have no idea how much I need or what kind I need.
Well, and I mean, let's use Daniel's example. Daniel's working on a pro bono case right now where the client's parent wants them to get life insurance, and the pro bono client's very young, in their early 20s. And, they seem to have a family friend or somebody who is a life insurance broker or agent. And surprise, surprise, they're recommending only the products from their particular insurance carrier. And the costs are almost twice as much as some comparable carriers for the same amount of death benefit term and so on. And so the feedback there is not hey, just don't work with this person, they're trying to rip you off. The feedback here is, hey, talk to them and say, why would we buy insurance from your specific carrier instead of insurance from these two or three other carriers that are offering either substantially more coverage for the same premium or the same coverage at a much lower premium? And if there's not a good reason for it, like, hey, happy to still have you be the broker or the agent who writes the policies. Like, it's not personal. We're not trying to like deprive you of an income or something, but it seems like what you're recommending to us here is a combination of too much premium for not enough coverage.
But that's kind of a hard conversation to have if you know the person, which it sounds like maybe they do, at least to a certain extent personally.
Well, and this is why I always like to phrase that conversation as a question, like, hey, why would we? Like, what do you know that I don't know? Now, the honest truth is, a lot of times the answer is going to be what I know is that I need to sell a certain amount of premium from my company, or I'll lose my job, or get have my contract terminated. But realistically, maybe there's a qualitative difference. Maybe there's a serious issue with certain definitions in policies. Not in life insurance as much as in long-term care. A huge difference in quality is the difference between a reimbursement policy and an indemnity policy. Reimbursement, you've got to send your receipts to the insurance company every month to say, here's my care and my costs, and then they review it, and then they decide what they're going to pay for and cover, versus indemnity, where they just send you a check for the full benefit amount every month and say it's yours to spend on your care as you need, right? And that might be a difference of 5-10% in the premiums for the policies you get, but an enormous difference in the quality of your experience with the coverage that you receive.
Yeah, that would be a huge thing to realize after you need to use your insurance, that, hey, I got the wrong kind, without really realizing what I was buying. That's kind of a hassle you don't have to do over and over.
Well, certainly. And, I think insurance is a good domain for that expression of cost is what you pay, value is what you get. And I always remember the Oscar Wilde, a cynic is a person who understands the price of everything and the value of nothing. So it's not to say that you should just go for the cheapest possible insurance you can find. I think you need to understand what adequate insurance is for you first, and then find the best priced coverage for adequate insurance, as opposed to just going from what is the cheapest, because you'll end up underinsured if you go for the cheapest, I guarantee it. So it's a question of what is the best price to value you can obtain.
Right. And if we're talking about this pro bono case, for example, and they're quite young, do they even need life insurance? Just assuming they don't have children or anything based on their age.
Yeah, I mean, and that's the exact case here, right? This is a single individual, no spouse, no children. There's really no insurable risk. So part of the conversation we're also having or trying to have here is, okay, I understand that your parent, right, your father, wants you to get life insurance, and that's wonderful, right? They work in risk management. They're worried about this. They've seen a lot of people who don't have enough insurance. They want the best for you. Like, I don't think this parent is preying on their child. So we can assume all the best intentions here. But the question becomes, what risk are we actually trying to solve for here? And for somebody who has no insurable need, there's a couple things I can think of here. It could be, hey, what if you develop an insurance or a health condition, excuse me, that makes you uninsurable in the future? So let's get something in place now so that risk is removed. It could be, hey, in contemplation of the fact that you are very young, we can get you a lot of insurance at a very reasonable price, and it's just going to be more expensive later. So let's just get it done now. Like, I can think of a couple altruistic reasons here, but that question you ask is the best question. Like, what risk are we actually trying to deal with? What problem are we actually trying to solve here by giving this 24, 25-year-old life insurance when there's nobody who actually depends on them?
Yeah, I mean, it's a nice perk to have. Like, we get it through work here, of course, but that's not something I even really factored in when I was taking the job, because it's like, I probably won't use that. It's fine. I'm young, no insurable risks.
Well, like in your case, what you get through work is $50,000, which is as much as we can give you without causing you to have to pay imputed income tax. That does not mean it's an adequate amount for you, right? But you're not married today. You don't have children today. You have some siblings and parents, but maybe nobody that's really dependent on you or that you'd want to like give a big lump sum, right? So I'm inclined to say you're adequately insured to put you in the ground if needs be and take care of your affairs without making anybody rich when you pass away.
Yeah, yeah. Heidi's going to have to clear all that up if something happens to me.
I think really what you're paying for is like an estate company to come clear out your crap when you die. I think that's really what you're insuring.
So my poor sister doesn't have to like sell off my furniture in the midst of her.
I mean, again, back to dying and leaving somebody rich if you pass away. Really, you're just hedging your bets there that she doesn't push you off a cliff.
Well, I think I'm also the beneficiary on hers, if we're being honest. So it's kind of a, who goes first situation.
I mean, mutually assured destruction, but you are both going to Croatia soon, so opportunities abound.
If that plane goes down, we got to set up some contingent beneficiaries on our stuff.
I mean, I will accept your contingent beneficiary designation if you see fit. I'd prefer you came back to work after your trip instead of crashing, but you don't really have a say in it.
You get my life insurance, but you do have to clean up my apartment for me.
Hey, so it's an interesting conversation, and this sort of gets away from your core topic here, but like key man, key person insurance, like as you develop as a financial planner, your role as a key person in the firm grows. So there's actually a case where at some point in the future, it could make sense to have an insurance policy on you. But I think today I'm going to decline to try to profit on your demise.
Not enough profit there. Plus, at my age, my money would be better spent on disability insurance. This is my smooth segue to get back to the topic. That is, I get so much pushback, I feel like, from my younger clients when I'm like, we really, there's a huge area here that's not being covered. We need to look at disability insurance for you, particularly if they're the main breadwinner of their household. And I get so much pushback. They're like, well, I'm really young. I probably won't need it. I'm very healthy.
My desire in like a comedic universe where there are no consequences to our actions to just like kneecap everybody who says that is so strong. I'm never going to do this, obviously. Like, I'm not a complete psycho. But, like, if we lived in a comedic universe where there are no consequences to our actions, my response to that would be to push everybody, like, down the stairs the second they said that. Because it's the dumbest non logic I can possibly fathom. Like, oh, I am not disabled today and therefore I shall never be disabled is just such a smooth brained take on that problem. And yet it is so common. And it's only common amongst people who, ironically, really would need it more than anybody else. Right. So, like, it's almost universal that, for example, like physicians, surgeons, really high earners get disability insurance. They're like, I've invested an enormous amount of time, human capital investment, right? I've got student debt, all this stuff. I've got to make sure that my earnings are protected because if I'm like a neurosurgeon and I get into an accident and like I break my hands and now I've got like shaky hands, like I can't earn neurosurgeon money anymore. I'm losing out on literally tens of millions or hundreds of millions of dollars in earnings over a lifetime in a career. So like I'm going to insure the hell out of that. Meanwhile, somebody who if they lost their job, they'd immediately go bankrupt will just be like, "Nah, if I lost my income, it would never happen. This is not a risk for me." And it's wild because that same neurosurgeon may not be able to make neurosurgeon money if their hands were damaged, but they could still be a general practitioner. They could teach at a medical school. Like they're still an educated, intelligent white collar professional who could do a lot of different stuff. Right. But people who literally can't afford to lose their income will just sort of shrug it off and be like, yeah, that would never happen to me. My job on the construction site, not dangerous at all. Nobody ever gets hurt. Like it's a very strange type of behavior. And so disability insurance is one of those things where honestly, of all the types of insurance you could have, it might be literally the most important because it's the only type of insurance that involves your personal loss, right? Like loss of ability to support yourself that you are not only the victim of, but then also the person who has to live with the consequences of. Like with life insurance, you can be selfish and say like, "Oh, I know I have a spouse and children who depend on me, but like I'll be dead, so fuck them." Like, and I'm not encouraging that, but like that is an attitude people can have, and I can at least respect the self-interest part of that. But disability insurance is 100% about self-interest more than anything, right? And if you're 25 and you can't work for the rest of your life, whether you have disability insurance or not may be the determinant of whether you live in poverty or whether you have a comfortable quality of life for the rest of your life. And it is absolutely wild to me that people just will kind of shrug and not think about it.
Do you think part of it comes from them just not wanting to think about it? Because we get, pushback on people not wanting to set up a will or something because no one wants to think about dying. Do you think some of it just comes from, I don't want to think about falling down the stairs? Or it really stems from like, it's not going to happen to me. I'm invincible.
I think there's a keen psychological distinction, and there's some good research on this that we all accept that inevitably we will all die, but we have a hard time identifying ourselves as being physically different than we are today. Right? Like if I can walk well, if I can climb well, if I can take care of myself, etc., I will always be able to. It's sort of this phenomenon where same thing with like retirement savings. People have a hard time of thinking of themselves as ever getting old, and the problem is, like, you inevitably will get old, and through no fault of your own, if you live a long life and you do become old, some warranties will begin to expire. Disability is not quite the same as a long term care conversation, but it's just saying, look, through a sequence of completely random happenstance, you could no longer be able to provide for yourself. And part of this is that people like often don't think of themselves as like risk taking. Like, oh, like I drive safely, I don't have dangerous hobbies. So like nothing bad would happen to me. But 9 out of 10 disability claims are not for injury, they're for illness. Right? Not things that you did to yourself or took risks on, but just like, hey, you happen to have a family history of ALS or a family history of MS or something like that. And through no fault of your own, you lost your ability to make a living, or your ability to make a living was severely negatively impacted by your condition. And people have a hard time identifying with that, but that is just the fact of the matter. Even in short stints, right? Like if you are diagnosed with, let's say, stage 3 cancer, your time is best spent really focusing on your recovery and treatment, not going to work and trying to like squeeze chemo and treatments in on the weekends. And so it's the same sort of issue where you don't have to be severely disabled. You can just be slightly disabled, and it can still have this enormous rippling negative impact on your finances and your life trajectory.
Sure. I guess that does make sense. I was thinking while you're talking, using these examples. You know the story, but I'm going to repeat part of it. Like a couple of years ago, my friend's house burned down, and one of the people that was in the house, she was young, she's in early 30s. She had no health insurance and no renter's insurance, and it was a house they were renting. And I asked her after, I was like, "You didn't have any of that in place? Like, what are you doing?" And she said the same thing. Well, I'm in my 30s. I'm pretty healthy. I probably don't need health insurance. And how often do you use renter's insurance? And I was like, "Well, I bet you wish you had it now. Your entire house just burned down." And she was like, "Yeah, kind of wish I did."
Yeah, and I mean that's a really good example where again we're just sort of risk averse, right? We experience negativity more than we experience positivity as human beings. This is sort of loss aversion, negativity bias behavior, but that same bias leads us to try to avoid thinking about unfortunate events. I mean, same thing with even like auto insurance, right? Auto insurance is a weird thing where people will have comprehensive and collision. I really want to replace and fix my car. It's very important that my car is fixed and replaced if something happens to it. But then they will skimp out heavily on liability protection for other people. And even worse, they'll skip out on uninsured motorist, which actually is about protecting them from other people's irresponsibility about their liability protection.
Hmm. Yeah, I think that's a conversation we've had with a lot of people because they don't quite know what each thing covers. I think sometimes too, it comes to that complicated insurance stuff that not everyone looks into.
Well, and back to things we don't know or don't understand, right? I think there's a lot of anchoring bias when it comes to things like home and auto. You get a policy, the agent recommends a number, you don't know what's good or bad, so you just shrug and go, sure, that makes sense to me. Or you get a policy, and one day you get the premium bill, and you go like, that's just so expensive. I got to find better insurance. And so you go on one of these online things, e-insurance, Progressive, Liberty Mutual, whatever, right? Where you could like pick your own insurance, decide how much coverage you need, and you just shove all the sliders to the far left side, like the smallest value possible, to make the your monthly bill number get super duper small, and then you're like, sick, now I have insurance and it's super cheap. And essentially you have like a paper bag for protection, and it's just not going to work out that well if anything bad happens to you. But it solved for your bias of like, I don't want to spend money on this thing that's never going to happen to me.
Yeah, that's true. Well, okay, so on that kind of topic, how often do you think people need to reshop? We do it annually here for clients. Would you recommend that same thing to people who are doing it themselves?
The agents and brokers of the world will get mad at me for saying it, but yeah, every year, because functionally your homeowner's policy, your auto policy are typically renewing every 6 months or 12 months. And that means functionally that the terms and conditions are completely being renegotiated and rehashed every year. And your policy may not change materially, right? It might be essentially the same terms, conditions, riders, and language every year, year over year over year for many years to go. And maybe the only thing that's really changing is a slight tweak in your dwelling coverage, a slight tweak in your premiums, but like it's not really changing. But that doesn't mean that the risks in your life aren't changing, and that doesn't mean that on the worst side that those terms and conditions aren't changing pretty dramatically. I think of a commercial realtor I know here in Longmont who a couple of years ago in the 2023 May hailstorm, had severe damage to the roof on his house. And he went to his insurance carrier and said, "Hey, I'm putting in a roof claim." And the insurance carrier is like, "Absolutely. We're going to give you like $6,000. I was like, well, hold on. Like, I've got like a $30,000 roof. It's a total loss. What do you mean 6,000? Like, oh, well, years ago, we changed the definition of what we cover for roofs. And so when you first became a customer, we paid for a whole roof. But a couple of years ago, we switched to a definition where essentially it's your roof, but depreciated. You've got a 13, 14-year-old roof. So really, it's actually only worth half as much as it was. And when we then say it's half as much minus your deductible, you get $6,000 for your $30,000 roof." And this person ended up having to go to court and do all sorts of things to get their roof replaced. I think they just literally got it put on like in the last month, almost 2 years later. But that's because they essentially thought that their insurance wasn't changing ever. They just premium goes up a little bit, policy didn't change year over year over year. And so all this to say, you don't have to change coverage every year. But to your question of like how often should you shop it? Every year. You should look at it every year. You should understand what you're paying for and what you're getting for it, or what protection you're getting for it, right? Because it can change on you without you realizing it. And for that matter, you may not be adequately insured, right? Your life situation may have changed in such a way where $120,000 of contents protection was fine for your furniture and your clothes and your stuff, but you bought your spouse a $10,000, $15,000 engagement ring or wedding ring, and you've got $1,500 of coverage for that because you never looked at your policy to realize that the jewelry sublimit is $1,500. So it just makes a lot of sense to take a look at it frequently, whether you make changes or not, to really understand what it is you're paying for and whether you are actually adequately protected.
Okay. Well, I think a lot of people are hesitant to do it because they're bundled. They've got it all at one company and they're like, oh, that would mean all these changes, all these kind of things. Does it make sense sometimes to unbundle?
Rarely. I think you have to have sort of a niche situation where, like, let's say you have a mountain property, like you live up in the hills or something. A lot of insurance carriers won't touch properties in the mountains because of all the fire risk, and so those are types of people who often end up with, one homeowner's policy with a specific kind of carrier, and it's very expensive, and then some lower cost auto insurance. But if you live here in like the Longmont Commons, unless you have like a special condition, like a teenager who's gotten in two car accidents already or something like that, chances are you're going to do better with a bundled policy than an unbundled policy, just because you have certain degrees of pooling of risk coverage and liability coverage that are shared between your home and shared between your car. And if your policies are held at two different carriers, then you have to pay for 100% of two different pools instead of paying for 100% of a shared pool. So there's just certain risk factors. This also gets into umbrella policies. They're often twice as expensive if it's not bundled with the same carrier as your home and auto. So there's just often going to be cost savings to having everything in one place. Doesn't mean it's impossible to get a better deal being split up or that there aren't special reasons that you're going to have to split things up. But all things being equal, if you can, try to just keep everything in the same place.
Sure. Well, let's touch on that umbrella thing a little bit more. When do people need umbrella insurance?
I mean, umbrella insurance is for everybody who doesn't know what this is, because this is a very common question. Like, you're saying umbrella, I don't own any umbrellas. What do you mean? Umbrella insurance is a very large pool of additional liability insurance, so protecting other people from you, from your accidents, from your negligence, but it lives behind your home and your auto policy. So your auto policy, what I typically see people here in Colorado have is $100,000 per person or piece of property and a $300,000 aggregate limit. And then on their home, they'll often have $300,000 of liability for like a slip, trip, or fall on their property. And here's the hypothetical. Let's say you rear end a Lamborghini. Well, you only have $100,000 of coverage. And if you total that Lamborghini, they're going to sue you for $150,000 above your policy limit, and you've got no protection there. If you rear end a bus or a school bus or something, and a bunch of people slam their heads forward on the seats in front of them because you hit it really hard, well, then each of them has up to $100,000 of coverage, but your aggregate limit's $300,000. If they all go in for an MRI or something, and half of them have a broken bone or something like that, that's going to total out to more than $300,000 very, very quickly. So an umbrella is starting $1 million. It's typically sold in $1 million increments, so 1, 2, 3, 4 million, and so on. Right, that just sits behind it. So if you have 100, 300, right, or a $300,000 limit on your home, now you have $1.3 million, or now per person you have $1.1 million. You often need to have higher limits. For example, on auto, you're often required to go to $250,000 per person per property, $500,000 aggregate before you have an umbrella. But now, great, now you have $1.25 million of protection per person per property. To give you some idea, these will cost maybe $200, $300 if it's bundled with your home and auto. It's often more like $400, $500, $600 if it's unbundled with your home and auto. But again, it's just an element of very cheap extra insurance that can really, really be helpful.
Sure. Well, and most people have that $1 million coverage that it starts at that you mentioned. When do you reevaluate and move up to 2 or 3?
I think really, and this is a broad sweeping statement, so take it with a grain of salt, but I think everybody needs $1 million umbrella, because I just don't think home and auto are adequate, particularly as things have gotten a lot more expensive over the years. Like 10 years ago when I started as a financial planner, people had 100 300s, and now 10 years later, people still have 100 300s. But like the value of 100 and the value of 300 have decreased over the last decade by something like 20-25%. So in that context, I look at that and say, okay, like we need to be increasing this already. I think the reason you jump from 1 million to 2 or 2 to 3, 3 to 4, et cetera, is equivalent to your net worth with an exception. Depending on the state you live in, there can be homestead exemptions for your personal property. Colorado's not a very good homestead exemption for your personal property state, but particularly retirement accounts. Like if you have a net worth of $1 million and $800,000 of it is in your IRA or your 401k, you probably don't need more than $1 million umbrella. But if you are, let's say, a small business owner, or you have a lot of hobbies, tchotchkes, rental properties, whatever it is, and you have $1 million of net worth, and all of it is in real estate or tangible assets or something like that, then in that particular situation, you probably want a million plus. So if we expand the numbers here, let's say your net worth is $3 million and 1.5 million is in stuff and 1.5 million is in your 401k. You probably want a $2 million umbrella to cover all the stuff, but your 401k is essentially untouchable. You don't need a $3 million in that situation. So it's just a question of how exposed to liability are you? If you were sued for everything you're worth, what could a plaintiff's attorney get at that's not already protected by statute? That's sort of the guiding light here.
Okay, plenty to think about there. What about other like smaller kinds of insurance? Like I see ads for, pet insurance or identity theft protection insurance, and like extended warranties are marketed to you as insurance. Like what about little things like that? Are they worth it?
Pet insurance, definitely. Identity theft insurance, kind of, sort of, maybe. In like extended warranties, almost never. But it just really depends. I think pet insurance makes a lot of sense, and I say this as somebody who's had to pay $5,000 to get underwear out of a dog, or who now has a cat with diabetes, who has another dog that just had a tumor this year. Like these are little one-off events, but pet insurance is making that a lot more affordable. Where instead of spending $5,000 for a surgery, we're spending $500 or $1,000 for a surgery. Instead of spending $300-400 on insulin, we're spending $80 on insulin. So like there's a risk management thing here. I think if you have one pet, maybe it's less necessary, but the more pets you have and the more high risk your pets are, the more important that becomes for their health. The alternative, and this is a crappy thing to say, but I will just say it for the benefit of people thinking about it, is it really depends on how much you care about your pets, right? There are people out there who are just like, listen, I've had 17 dogs, and anytime a dog gets sick, we just put them down. I don't like you, but I understand your financial decision here. Conversely, if you love your pets, you love your animals, you're willing to spend anything to keep them alive and save them. Pet insurance is just like health insurance. It's going to make sense to have to make sure that they're taken care of, particularly for catastrophic events. When we get down into, again, like extended warranties and that sort of stuff, though, unless you're like really, really worried about the cost of a particular thing, like don't buy the warranty on the DVD at Target. Like they'll sell you insurance for anything because it's free money to them. But unless you can't afford to replace the thing that you just paid for, the new stove, new refrigerator, whatever it is, you're just wasting your money. Like some of this stuff will break and it might be covered, but the probability that all this stuff is going to break is going to be pretty low, and you can just throw a lot of money away on over insuring your life.
Okay. And if you're shopping pet insurance, is there a lot of variation and you have to really read into the policy? Are there pretty simple, basic things in that case?
There's a lot of variation. You definitely want to read your terms and conditions. It is not a highly standardized area of insurance, so it's one to keep an eye on. The other thing to also be cognizant of with pet insurance is that it'll be really cheap when you have a puppy or when you have a kitten, and it'll get really expensive as they get older. So just be aware that they will try to price you out the closer your animal gets to its life expectancy. They just realize that at a certain point, when your dog gets 8, 9, 10, 11, 12 years old, particularly depending on breed, that you can reach a point where it just doesn't make sense to have the coverage anymore. So just be mindful that at a certain point, the inverse of what I said earlier about just putting your pets down when they get sick, there comes a point at which it can be functionally, financially prohibitive to take care of your pets at a certain age, even with insurance. So just be really cognizant that there comes a time for all animals, for all pets, and you need to balance your love for that animal and the knowledge and expectation that it's not going to live forever.
Oh. Okay, well, as long as we're on this devastating topic, this ties in perfectly to my next one, Dan. So here we go. Okay, so I was talking to someone a couple weeks ago, and she was, telling me a close friend of hers had passed away a few months ago, like very, very close. It was very sad. She was very upset about it. And she said, and on top of all this, I was the executor of her will and her estate. And she said, I didn't really realize what that meant until my dear friend passed, and I was in way over my head. It wasn't what I expected, which leads to my topic of today. What does it actually mean if you agree to be the executor of somebody's estate?
Bottom line, you're responsible for everything, right? They have died. You are now accepting responsibility for all of their affairs. So, in the simplest terms, right, I have to handle getting everybody their stuff. Right, you're supposed to inherit the house. You're supposed to inherit the car. You're supposed to inherit this account, that account, the jewelry, whatever. Like you're responsible for handing all the stuff out. On the negative side, you're also responsible for dealing with all of the liabilities and outstanding debts and so on. Now, a lot of stuff just goes away when you die. Like all the unsecured debts, you get to wash your hands of that. Doesn't mean that the credit card company and all the student loan companies and whatnot won't harass you and say like, "Don't you want to pay this off? Wouldn't you be a good person if you paid the?" Sorry, that's the risk that they took by doing unsecured lending. They charged high interest as a result of it. Too bad for them. But on the other side of that, that doesn't mean that you're not still then stuck with the stress of people calling you and harassing you about it. It also means in negative cases that you're dealing with a lot of the emotional baggage, right? Because until their affairs are really settled, until all the stuff is given away, until all the estate matters are handled, the burden is on you. And I can tell you from experience, both with clients, both in my family, being an executor can be a several year long process, and you can sort of just be emotionally burned out pretty badly by it.
How can it drag on for that long? I don't think people usually anticipate that.
Well, part of this is just the logistics of it, right? Like, what do you do with your personal things today, right? You keep them relatively private, right? So you're not like leaving a list on your kitchen counter of all your assets, all your affairs, all the things that are important. If you're smart, you didn't write down all your passwords on a sticky note somewhere. So it can be a multi-month, multi-year thing because literally your family or your executive can be stuck checking your mail for months and years, waiting to see if statements or things show up or follow-ups or things show up. You have to deal with the funerary arrangements. You have to deal with all the various outstanding issues and problems dealt with by this estate. Let alone then, what if they have children? What if they have pets? Right. So like all of them, the people and things and creatures that need to be cared for that can come with this. And part of this then can not only just be discovery, but sometimes just the mass of stuff. I mean, like, think about how much stuff, literal, tangible things you obtain over the course of your lifetime that are just sitting in boxes and bins, right? As an executor, you could hypothetically just like take all that stuff and load it into a truck and throw it in the dump somewhere. But what are you more likely to do? You're more likely to go through every single box, every single bin, every single folder, every single cabinet, every single, container and sort through it. And so that can be time burdensome to the tune of dozens or hundreds or thousands of hours of effort, depending on the accumulation of stuff. Let alone, God forbid this person was a hoarder, or God forbid this person had a mental illness that led them to do strange or unusual things, or to sign on for additional or excess commitments, where you have like timeshares and all sorts of other sort of burdensome things that can really follow a estate around for quite a while.
Are you also responsible then, like if they had things internationally, like in other countries, does it extend to that? You have to handle all of their assets?
It can. This is one of those great complexities. Like a lot of people think about retiring overseas. Here's a question that almost nobody has an answer to at face value. If I have a will here in Colorado, but I then have moved to Mexico and I live and die in Mexico, which estate laws apply? Did I need a will in Mexico? Does that will need to match up to Colorado? What about different statutory requirements in, let's say Juarez versus like Puerto Vallarta or something like that, where different, statutes might exist around intestacy or estate laws, right? Did I hire the appropriate legal counsel that could answer and explain the questions on both sides of that arrangement? What if I moved to Togo or Bora Bora, or I lived in France for a while and got a will done there, but then I also bought another house in Germany and I had citizenship in different countries. Like it gets really messy really quickly. So to your question, it could, but there's no universal answer here because every territory has its own statutes around death and the passing of assets and how that gets handled.
Okay, well, and if it can be so complicated, what if you make a mistake somewhere? Are you personally liable for things like that?
You can be. And that's one of the issues. Now, most wills and estate instructions will say that executors or trustees can, use the funds of the estate to handle their expenses within reason. But functionally, as an executor or trustee, you have a fiduciary obligation to the beneficiaries of that estate or of that trust or both. So, in that context, then If you make a small mistake, you could be held liable. But if you are grossly negligent or even just generally negligent, the beneficiaries of the estate, depending on how bad the harm was from that issue, could come after you personally for it.
Hmm. So maybe considering family dynamics and things like that is important before you agree to do this.
That's a huge one. And this is also why there's such a large industry for professional trustees, for commercial banks and so on to offer trust services or professional trust services to try to sort of remove the potential risks for individuals. Now, I think there's a massive pile of problems with these trust companies and businesses. I see rampant abuse and problems in this industry, but that could be a subject of a whole different podcast. So it's not a perfect silver bullet, but for your question around liability, it can be a thing that helps solve for that.
Hmm. Okay, well, what if someone asks you to do this and you know all this information and you kind of don't want to? Can you just say no? I don't want to help you out if you pass away?
Oh yeah, just because you're named as executor doesn't mean you're obligated to do it. This is why there's typically, kind of contingent upon contingent. You'll see the same thing in trustees, where it's like, here's trustee number one, and then the second row, and the third row, and the fourth row. I've seen a trust agreement go out to like 7 layers of if then, if then, if then, if then. So it just depends, but functionally, yeah, nobody's obligated to do this stuff. But if you agree to do it, not just at the time they write their will or their documents, but also at the time that it really comes into play, you have to do it at that stage. You can resign, you can step back and say, no more, I'm not doing it past this point. But it does have to get handled in some way, shape, or form. And if you sign on for it, just understand it's a big lift.
Well, that's very sobering. Let's talk about something else cheerful, like a prenup.
I'm sure you wish you had one.
I sure do. Doesn't matter now, but it would have been nice at the time. I tell you what. A little bit of clarity and protection, maybe.
Well, let's talk about it then. What do you think, or I guess what is your question here about prenups? Because I think anybody could garner from that little bit right there that you and I both are of the opinion that prenups are a good thing. But go ahead. What do we want to talk about here?
Yes, and you and I are in different positions. You are still happily married. Great. I am divorced. You, I believe, have a prenup, at least regarding the business and stuff. I did not have one. And I know our thought process at the time we got married, I was in my early 20s, and I was like, I don't have anything to fight over. Like, what are you going to do? Take the $50 I have in checking? Fine. Like, I'm not going to go through all this fuss that I thought it would be to get a prenup, so I didn't. But then over the course of a relationship and our marriage, I acquired more, as one does. And then came to the divorce and is like, oh, I really wish I had a prenup. I should have done that. I should have looked into it, which leads to today's conversation. Maybe we should explain a little bit what is a prenup? What does it cover? How specific can you be?
I mean, a prenup is fundamentally a marriage contract, right? So the trick is when everybody gets married and gets a marriage license and signs it, if you don't have a prenup, you are using statute as your marriage contract. It's just like an estate and dying intestate, right? Without a will, without a trust, and so on. It's saying, hey, I'm just agreeing to the state defaults. And so if you get married and don't do a prenup of your own, same thing. You're agreeing to the state defaults, which means that the existing laws at the time you get married and the laws that may exist in the future at the time that you could get divorced or separate for some reason are going to govern the terms and conditions of how you separate things. So, I mean, fundamentally, a prenup is, I think, best viewed as a affirmative activity of agreeing in advance what you both think is going to be a fair approach to a division of your assets, a division of your responsibilities, or handling certain obligations in advance rather than letting the courts and statutes and attorneys hash it out or fight over it or decide what's going to happen to you in the future should that come to pass. You've heard me say it in all sorts of contexts, and I maintain it in marriage just as much as I do in business. Good contracts make for good relationships. Right. It doesn't mean that we have to negotiate. We're going to have sex no less than twice a week, except on the third week of every month. And so, like, you don't have to get into crazy stuff like that. But when it comes to, hey, if we're going to have a parting of the way someday, this would be my concern. This is what's important to me. I think it's better that you have a conversation about that and make those decisions for yourselves rather than letting the state make those decisions for you.
Sure. Well, what do you say to that age-old argument of like, oh, it's not very romantic, or it's kind of you then expecting the marriage to fail that you do something like this, so you're going into it with a negative attitude, things like that.
It's way less romantic.
What?
Carving each other's eyes out with attorneys down the road instead of just saying, well, good thing we agreed to this in advance.
That's true.
That is just the baseline thing here. It's unpleasant either way. It's not romantic either way, but it's a lot easier to say we agreed this is how it's going to be versus saying nothing bad will ever happen no matter what for any reason ever. And if it does, I'm going to light you on fire.
That's true. Okay, so if you have a prenup in place, let's say you get married, you're very young, you can update it over the years because, things change.
Yeah, I mean there are prenups and there are postnups. So even somebody listening to this right now who goes like, "Oh, that's a good point. Maybe I should talk to my spouse about that." First of all, careful. But with that in mind, yeah, it's something you can amend, you can change. The big thing here is and this is just a point of enforceability. You really, if you're going to do any prenup, any postnup, you both need to have legal counsel. You both need to have that. It's not enough to just hire one attorney for this. You both want to have somebody represent your interest in it because otherwise, the number one thing that's going to blow up your prenup is going to be, well, my husband had a lawyer and I didn't have a lawyer. I thought his lawyer was my lawyer. Nope, not going to work. So then that's going to create a situation where the prenup can fall apart or postnup can fall apart, right? When push comes to shove, on the basis of it was unfair. One of us had legal help, one of us didn't. So if you're going to do that, you both want to engage your own legal counsel. Tell them to be nice, tell them to be polite, but please, help me understand the ramifications to agreeing to this or that.
Okay. Do you recommend hiring any other type of professional during this time, like a financial planner or anything else, or attorneys should be able to cover it?
You absolutely should hire a financial planner during this sort of thing. Just because everybody should talk to a financial planner at least once. And we can go back to previous episodes about whether you just need them for a project or an hourly consult or a comprehensive thing. But I mean, you're talking about merging your lives, your finances, everything around your responsibilities, and so on. And so the trick is, for most people, not everybody, but for most people, it's the first time you're going to get married. It's the first time you're going to merge finances. It's the first time you're going to share taxes and obligations and debts and so on. And so I think it helps to engage appropriate professionals where possible to use and leverage their experience to make the outcomes and the process of all of that smoother and better for you. And that does mean talking to legal counsel to get things like a prenup in place and so on.
Okay. Well, I mean, you seem to be of the mindset that everyone should have them, but is there certain people that you think are more likely to need them, like a business owner or, parents with children, things like that?
It's not a more likely because I think that's an individualized question, but I would say the more complex your situation getting into your relationship, into your marriage, the more important it is, right? Like if one of you is a business owner, did you build that entire business before you ever got into this relationship? And if so, when you get divorced, do you want to suddenly have to hand over your half of your life's work to this person? Right? If you had children before the marriage versus children you have during the marriage and so on, do we want to have to deal with, kind of who is really mom, who is really dad sort of things, or do we want to sort of agree what would be equitable and fair, assuming certain conditions in advance? Like that, this is sort of the whole fundamental thing of good contracts make for good relationships is let's just talk about it. Like it's not our goal or ambition to get split up or separated or something, but like let's just really understand that because it's not going to be any better if we have to fight about it later.
Yeah, that is very true. I can promise everyone that. I think we've talked about that in many episodes. We encourage people always to have conversations about everything, and it rings true here for prenups and postnups, but you should be talking to the people in your life. That is our ongoing advice, I think, that I give most often to people.
Well, and above and beyond that as well, like there's a whole bunch of you don't know what you don't know stuff here. Like most people we talk to who are in the process of getting a divorce have already made a huge number of mistakes throughout the course of their marriage related to inheritances, assets they had before they got married, and so on, that are going to leave them in a much worse off position going through a divorce than they would have if they'd just taken 30 minutes to talk to somebody who does it all day, every day, and just understand some of the big landmines to avoid.
Sure. And it doesn't have to be that complicated, I imagine. I think a lot of the reason people don't want to, in like my case when I was young, it's like, it seems like a lot of fuss.
It doesn't have to be complicated at all. I mean, I'll give you a really good. I'll use mine as the example, right? My prenup with my wife really just revolves around one thing. I have a business. She has a business. We agree that my business is my business and her business is her business. That's the biggest thing of it right there. There's plenty of other little ifs and tidbits and questions. Right? Is infidelity a thing that tips the scales? Are like there's all sorts of things you can include in a prenup that can make it more complicated. But also even just looking at like a prenup questionnaire really can trigger a lot of like, oh, I never thought about that kind of conversations. So even if you decide at the end of the day, like, we love each other, we're not going to do a prenup, it's worth just Googling, like, what do prenups often cover? Like, what do they really talk about? Because there's always like this movie, TV show plot version where it's like, well, they have a prenup, so if he dies, she gets nothing, or if they divorce, he gets nothing, whatever. Like, that's always sort of like the broad brush version of prenups. But realistically, it's, I think, very helpful just to really review and understand what they can entail and cover, so you can have a more informed conversation with your partner about, hey, I love you, I want to spend the rest of my life with you, but if I wonder what you think about this, because it helps to get on the same page now rather than later.
Can you get quite specific with them if you want to and put a whole bunch of weird stuff in it as long as you both agree to it?
You can, up to a point. The courts, and this applies to both estate things and prenups, courts are pretty strict about not creating like deliberate harm through these types of mechanisms. So I'll use an estate example because it's easier to give here. But for example, people have put instructions in their wills or in their trust saying things like, my grandson gets an inheritance, but only if he divorces that bitch. Like, there's stuff like that where people will put in things where it's like, all right, it is not in society's interest that Greg divorces Cheryl, right? Just for the purposes of inheriting money. Like, that's not beneficiary. That's not going to be enforceable. So there's things like that in prenups where you can get pretty neurotic about it, but your appropriate legal counsel could probably do a pretty good job of telling you, like, you can't require them to cut off their hand in the event of a divorce to receive child support. Like, there's just weird stuff like that you're not going to be able to put in or have enforced in place. And bear in mind, right, prenups are often invalidated for a variety of reasons. So the weirder and more neurotic your terms and conditions get, the less you let your legal counsel help you guide the process by which you do that, the more likely you are going to end up with an invalid prenup anyway.
Well, that's the last thing you need. You'd be in the same spot as me. Plenty to think about there, Dan.
Hey, you seem so happy and fulfilled these days. And now I've talked about risk management and estates and all of that. I think the biggest risk in your life is that you fall off a mountain.
No, although I did find a new place this weekend that I might try to go scrambling if I have time that I haven't done before.
I'm going to work on that key person insurance.
I think it's probably fine. I don't know. I don't think you need a rope I don't think you need to rappel down. I think I can do it.
Good luck.
I'm feeling optimistic. I'm ready.
After this very dire conversation about risk management and whatnot, we will keep our fingers crossed for you. And on that point, what is it, other than the location of new places to yeet yourself off of mountains, that you have learned in the last couple of weeks that you'd like to share with our audience?
Let's see. I didn't prepare one in advance this time, Dan. You'll be disappointed in me. But off the top of my head, I would say that communication is very, very important, both with, conversations I've had with clients, and whether it be they're confused about something, which means, I didn't explain it thoroughly enough, or, questions I have of them, people in my personal life, that one teacher I have in one of my classes that I have a gripe with, who is the worst communicator of all time. And after the conversations we've had today here in the podcast, you got to talk to people very, very openly, or you're going to make a mess in every area of your life possible. That's my big advice.
I'm going to try to pull that all together because it kind of came everywhere. Your advice or your takeaway is, good communication is valuable. Is that the takeaway?
Yes. That's the little slogan that you could put on a t-shirt.
There you go. We'll get one printed up for you. We know people.
Perfect. Oh, that's true.
Yeah. Scasma here in Longmont. Great printing of stuff on things company.
Yeah. Looking forward to that shirt.
The Science of Wealth is produced by My Wealth Planners, a registered investment advisor in Colorado. The theme song is This Is Your Time by Dan Phillips. The podcast is intended for educational purposes only and is not investment advice or any other form of advice. Not all material discussed on the podcast is appropriate for every individual in every circumstance, so you should consult with a certified financial planner, tax professional, or legal professional as appropriate before attempting to apply any of the subjects, strategies, or tactics discussed on the podcast.